There has been a ton of talk about what is exactly the employee retention credit. So I brought on the man who I know has all the answers. I call him Josh Z. He owns a company called ERC Specialists that helps people get the employee retention credit. And generally, I think their company helps them get 30% more than any other company and an extra clip. Luckily, got him to come on and explain absolutely everything to us. If you guys already know or are interested, you can go to erchere.com to see how much you qualify for. And again, thank you guys so much for tuning in. If you guys do have any questions about it, put it in the comments below so that way we can answer them. But here we go. Welcome to the Winning Move podcast. We have an amazing guest on today who's going to share some absolute nuggets on how you can help your business throughout these times for free. My good friend Josh Z. How you doing, Josh?
Doing good. How are you, Strat?
I'm doing great, man. Thank you so much for coming on, man. I know you're busy.
You bet.
All right. So we're going to talk today about really the ERC program, and Josh has an amazing company that can help you guys with that. And so we'll start off. Josh, what is ERC?
It stands for Employee Retention Credit. I can go over the history a little bit, but the one thing that you got to know is a lot of us during the pandemic, we've heard of PPP and EIDL. Well, at the same time of PPP, there was something called ERC, Employee Retention Credit, but you cannot do both. You can only get one or the other. PPP was so easy. A lot of us got PPP under the CARES Act. Well, come now till fast forward to March of 21, President Biden amended the CARES Act and called it the American Rescue Act of 2021. What he did is, if you got PPP, now you could get ERC. And I say that's when it started, as far as that first amendment where you could do both, but it's actually been amended 5 different times. We'll go over that probably a little bit later, but really the history started, and I usually kind of start with my background is I'm a commercial real estate investor by nature, by trade. I've been investing in real estate for almost 19 years, 7 years in commercial. And I was really just trying to find stimulus money for an oil business I have out in Wyoming. And a friend of mine, ended up being now my business partner, just called me and said, hey, you should take a look at this. I called 2 or 3 CPAs, one being the same CPA that does Robert Kiyosaki's taxes, Tom Wellwright's company. No one could help me. Well, one of them told me it's a payroll credit. So I looked into it, and no one could help me with that. So I was like, well, maybe there's a business opportunity here. And that's really the history of our company. But the history of ERC, Employee Retention Credit, stems from back in the PPP era, then has changed over time. And technically, and we'll go over this in a little bit, it expired at the end of quarter 3, but technically you can amend someone's business quarterly returns for 3 years. So.
Oh, wow. And so you really I remember talking about this. You went to everybody, nobody could help you. Like, hey, how do I do this? How do I do this? How do I do this? And nobody knew.
It was crazy. And I was sitting there thinking of opportunity, and I had the mentality because I read the book Who Not How about 2-3 years ago, maybe 2 years ago. And, maybe I should try to find someone that's specialty in this particular stuff. But there's this weird gray area. CPAs, they usually don't do payroll, and then payroll companies don't amend quarterly returns. They do active, ADP, Paychex, Gusto. So, who could help me in this? And so we end up getting the right people, the who's, to develop a company out of it.
Bro, that is so cool. And so what's changed with the loan? Like, what are these amendments that have happened? If this now is the right time to talk about that. Like,
well, I'm going to stop you there. Technically, this is not a loan. And that's actually good to know, because like you probably understand, PPP was a loan and was forgiven later, where this is forgiven the day you receive it. This is basically a rebate of wages you paid in 2020 or 2021 with W-2 employees. This isn't for 1099. This is for W-2 employees, small businesses under 500 employees. And so, with that, this is forgiven right when you get it. Now, why do they call it a credit, and not a grant? Because it is, I hate using the word free money, but technically it's kind of along that lines. But this is not debiting a tax credit against your taxes over the next couple of years. This is a refund check. And why they call it a credit is if you have back taxes, they'll keep that and they'll send the difference. In other words, we had a company last week, they were approved for a little over $800,000. They had about $250,000 of back taxes. The IRS kept the $250,000 and then sent the difference of $550,000. Now, every time that's happened, every single person that has back taxes loves us, because now they found a way to take that off their chest and have better sleep. So,
wow, that's amazing. And that, I mean, 200 grand, like that helps out so much.
Oh yeah. Yeah.
That's a game changer.
I mean, there's businesses, that made a lot of money in 2021. This has nothing to do with making money or losing money. Well, technically there's a part that's losing money, but if you made money, there's actually a way to still get qualified. Because a lot of people say, man, I looked at this and I didn't qualify because I made too much money. You're probably right when you looked at it, but this has been amended 5 times where they've made it a lot more easier for businesses to qualify for. So how can it help my business? In different ways. I would say, if you're a business, plumber, or let me use this example. So a pizza joint that we helped, we ended up getting them $420,000. They actually made a lot of money in 2021, but they're already looking to add 1 or 2 more locations with that money. Now, that's what kind of the program's for, is to stimulate more of the economy. And because what does that do? That added probably, I don't know how many employees he has per location, but let's say 15 to 25. That just added, 30 to 50 jobs of stuff that we need to get out to the economy. And that's kind of the purpose of this, because, PPP number 1 and 2 combined was almost $500 billion, 500 billion. They've put an earmark about 400 billion to this. And did the PPP run out? It did, right? It did. And when it was out, and so we always tell people, because the one bad thing with this program is it does take 6 to 8 months for the IRS to send the money, because, PPP, that was under the SBA and EIDL. This is under the Treasury Department, AKA the IRS. And so when they're getting it, they're sending it out in 6 to 8 months. And so with that, we tell people, when we first started, it was a 4-month turnaround. Now it's up to 6 to 8 months. If you continue to wait, it could take up to 12 months. And so we tell people to make sure you start getting in line, for that money for your business. Well, especially with how backed up, it's been, it's only going to get longer wait time. Yeah. If you don't take action. Oh, for sure. I mean, if you've done anything as a business owner and had anything amended, it's taken 10 or 11 months for me on certain things. Okay. And so you think about 70, 80% of U.S. businesses qualify for this? So yeah, you're referencing the Forbes.com article. So just recently, about 6 to 8 weeks ago, Forbes came out with an article that basically said 70 to 80% of businesses under 500 employees should qualify for this. Do not pre-qualify yourself. And we'll go over, how to pre-qualify yourself here in a little bit. But that's the thing, is you don't want to pre-qualify yourself, because maybe you can get a little portion of it, because this is up to $26,000 per W-2 employee. You got 10 employees, that's up to $260,000. And it's crazy. We've helped a lot of people. We've helped a lot of nonprofits that had a decrease in revenue because of the pandemic. We just recently did, this is probably one of the biggest ones I've seen. This last week, a Baptist school out of Texas, $4.7 million they were approved for. And that's going to change them. They had to actually dip in their pockets to get things stimulated in 2021, is what they told us. So we were definitely happy to hear that that's something they're going to be able to utilize. Oh my gosh. All right. So let's talk a little bit about you. Who are you, Josh? Mr. Josh. Oh, yeah. Yeah. Josh Zagloski. Like I was saying, I'm a commercial real estate investor, 4 kids, wife, been married since 2001. So 21 years. Entrepreneur. And I'm glad I actually read a couple different books. Our mutual mentor is Mark Evans, and I read the book Magician versus Mule about a year ago. 2 years ago, read Who Not How. Those 2 books really helped me to kind of understand entrepreneurship, because all I was doing at the time was just finding different ways to make money in real estate. And it kind of opened my eyes to other opportunities in business that is outside of real estate. And so now, I'm one of the co-founders of ERC, and not the ERC program, but our company. And with that, my title technically is Vice President of Business Development. And so I'm worrying about, how can we develop and help more and more businesses, whether they got 2 employees all the way up to 500. receive this stimulus money. And I told someone earlier today, there's a lot of gratification when you're helping businesses that do have about 2 to 10 employees, because 40,000, 50,000, that does a lot for their business. And I can tell you story after story, but there's a lot of gratification because, when I first started this in April of 21, 10 out of 10 businesses didn't know about it. I mean, when I talked to you for the first time, you're like, wait, because the first thing I'm always trying to get over, this is too good to be true, And right when I get through that, and I'm like, okay, Google ERC credit, go to irs.gov after the ads, you'll see it's real. Now, why hasn't certain people told me about this? And it's just a weird gray area, to get the money. And now 7 out of 10 business owners don't know about it. So there's still 3 out of 10 that do. But some of them have heard the wrong information because they don't know all the amendments, and we're kind of ahead of the game, always watching those.
Well, talk about how your CPA probably doesn't know about it, your accountant, whoever. A lot of these people don't even know about it, or they say you don't qualify, but then they really don't even want to do the work because it's so much paperwork to do it.
Yeah, and that's the main thing. Is I always say don't get mad at your CPA, your tax professional, your enrolled agent for not knowing this, because they do your 1040s and your 1120s. This is amending your 941. So if you have a payroll company or you have in-house payroll, that's probably why you don't know about it or don't fully understand it. Now, about 10% of CPAs out there do payroll. And so if someone's listening right now and they're like, wait, my CPA hasn't told me about this, again, don't get mad at them. Ask them if it's valid. But if they do it, they probably already would have reached out to you. That's the first thing, right? Yep. And so I do have some people, it's like, well, I guess my CPA does do it. Oh, but he didn't want to tell you that he did it. It's kind of because it does take about an hour or two per employee to file this. So if you have 10 employees, you're adding about 20 hours of work just for your one business. Now, can an individual person do it? Yeah, it's very difficult because there's almost 200 pages worth of legislation to understand. CPAs could do it, but again, they're going to get backlogged because you are not their only client. They have 200 or 300 clients, and so they would get completely backlogged. We went from 6 partners when we started to now 190 employees. We've made it to scale. And so with that, we're able to help businesses and to get them the most amount of credit possible through the program.
Well, that is so cool. So let's talk a little bit about ERC, who you guys are. And I have some quick bullet points that we could go over, but let's just hear from what you're doing. You do have a pretty large team. You guys help thousands of companies. What's the biggest reason people should even work with you instead of going to their CPA and other stuff?
We specialize in it. I think that's kind of the biggest thing is, your CPA, we're not here to steal someone's income taxes. We don't want to do your, end of the year taxes. We just want to do this specific piece. I mean, you and I have talked about this, not in ERC, but in commercial real estate, there's something called tax cost segregation. That is someone a CPA that specializes in helping me get more depreciation. In other words, if you're going through a divorce, you don't call a real estate attorney to defend you. You call a divorce attorney, and so it's the same thing as we specialize in this specific program. And that's why I would say that, why to go with this. Now, a lot of people are probably already asking okay, that sounds great. How much is this going to cost me? Because people start thinking of that. And so what we decided to do at the very beginning is, because it does take 6 to 8 months, and at the time it was 4 to 6 months when we first started, we don't charge anything up front. Literally. I mean, you can go through our survey, which takes you 5 or 10 minutes per EIN. So if you have other EINs and stuff or something, just know it's about 5 or 10 minutes. Very simple. We don't ask for a credit card, payment, nothing. At that point, it's going to tell you, based on what you told us, you're going to be approved for between $200,000 and $350,000. Next is, we need a couple documents from you, some 941, some PPP info, some payroll information. Then once you upload that, and that's what we're waiting for from you, is it takes us about a week or two to come back to you and say, okay, based on our analogy and your documents, you're approved for $213,000.42. Do you want us to file? They click the DocuSign, and then it's off to the IRS. So what do we charge? We don't charge anything up front. We charge 15% of the approved credit when you receive the money. So we wait 6 or 8 months until you get it. Because the reason why we did that is when we first started, many people was like, man, this is too good to be true.
Yeah.
You know, if you're taking 20, 30 grand from me, I don't know. I mean, how long is this going to take? 6 months? You know,
that's a long time horizon.
Yeah. So we technically, as partners, we bankrolled this to make sure people can actually get the money in the back and they feel comfortable about, okay, I'll wait for this. I'm willing to pay for something that, hey, I didn't even know about this. This is newfound money to me. This is awesome. And I don't have to pay it back. This is not a loan, you know, and you can use it for anything. PPP, you had to disclose what you're using it for, right?
Yep.
This, you can use it for anything, you know, just like that pizza joint, adding more locations. And so with that, you know, us as ERC, we decided to do that. And so I think that kind of propelled us of being one of the top companies in the country helping a business owner, because we're helping about 300 or 400 a day through our process. So that's what makes it, you know, good. That's why I would say choose us. You know, obviously I'm going to be on the fence of why choose us, why not. But I do want everyone to know the history. Why hasn't this person told me about? Why haven't I heard about this? I always say still, you know, Google it, ERC credit, even reach out to your tax professional just to ask if it's valid. He or she might tell you you don't qualify. Now, we talked about that at the very beginning. Why wouldn't I qualify? Well, this has been amended 5 times. When it first came out, the questions were, you know, do you have 500 or less employees? Well, I should say in 2021, there was, do you have 100 or less employees, and were you shut down at any point in the year? You can qualify for money. 99% of people were shut down at least in April or May.
It was supply chain, right?
Well, like supply chain issues. Yeah. So supply chain is in 2021. Do you have 500 or less? Did you have a 20% revenue loss? And then recently in October, so maybe someone saw it before, or have you had a supply chain disruption? And so there's a couple of things that we need, like emails from your supplier, very simple stuff, because that's why Forbes came out. 70-80% of businesses qualify for this because of that supply chain.
Bro, and I personally do not see a single company that did not get affected by supply chain over the last 3 years. Like what's up?
It's out there. I mean, it's more a services company. Like I've had people that are massage therapists, but still some of them are like, hey, I couldn't get gloves. I couldn't do, you know, masks. I couldn't get a lot of masks. So I have heard it in certain aspects where they're like, actually, we could get a lot of masks and we could get this. Well, then you wouldn't qualify. Very, very small. I always say, have the peace of mind for free to go to our website, and then it tells you, sorry, you don't qualify. Or, hey, I have an option here. Might as well see, and I don't even have to pay these guys till I get my money. It's almost like a contingent attorney, right? Where he waits until, you know, there's an injury and he can get a settlement on it, and then he gets a percentage, but he works all hard to get the max amount of money he can for that client.
Let's go into this, like how it's different from the PPP. I think that's one thing that is like good to harp on.
Yeah. PPP was very easy. There was even, I mean, you see, if you Google PPP fraud, there's fraud cases out there.
Right.
It's actually hard to commit fraud in this. Why? Because we're amending your 2020 returns and your 2021 returns, quarterly returns. You've already sent those to the IRS. If you told me, Strat, hey, you know what? So you get up to $26,000 per employee. Can you just put like I have 60 employees? What did you put down in your 2020 returns? 5? Then I have to put 5. I can't put 60. They're going to decline it right then. You know, I have to match it up. You know, so it's very hard to commit fraud in this. And, you know, especially now that with the supply chain, it's very easy to say I have a supply chain, but there is some information that we need to get if there's delays or anything like that. And we have the team in place to make sure we're getting all the documentation to make sure you get the max amount of dollar, you know, within that. And the biggest difference is really PPP was really easy. And there was only a few questions that you had to answer. This one's a few questions, does take a little bit longer. And there's a max amount of dollars available for this, you know, so.
And real quick, so W-2 employee, I remember talking to you about this. If I'm a W-2 employee, but I'm the only W-2, it doesn't count. If I'm a W-2 employee and I have my wife, I'd have to be a 49% owner in order to get the credit, correct?
Yeah. So if you're 51% or more owner of the company, you wouldn't qualify. And that's one of our qualifying questions in our survey. So we say, okay, if you're the owner And that, let me back up too. Sometimes people always think that disqualifies me. And if I have like a few more employees, let's say you have 10 employees, but you're counting yourself as a W-2 of the 10, technically, depending on your ownership percentage, you might not be able to get qualified. Not your business, but just you individually. So the other 9 would be qualified, just not that one person.
Okay. Awesome. That was one of the questions. So tax credit eligibility. Let's talk about that for 2020 and then 2021.
Yeah. So with tax eligibility, a lot of people always think this is debiting against my my years of taxes. Again, this is a rebate. Where that number $26,000 comes into place is there's $5,000 for 2020. So there's 2 questions. Do you have 100 employees or less?
Yep.
If it's yes, then it's where you shut down or amended your business based on a government mandate. If the answer is yes, then you can get up to $5,000 per employee for the whole year. In 2021, which is the max credit, that's $21,000, $7,000 per quarter per employee for quarters 1, 2, and 3, not 4. So the question is do you have 500 or less? The next, if that answer is yes, and the next question is did you have a 20% revenue loss, or did you have a supply chain disruption to your business? And that way you can get the max amount of credit possible, with your business. So that's kind of how the calculations kind of work.
I'm still though, 26 grand for free from the government. Do we have to pay taxes on the money that we get?
So the answer is yes, but very small. Here's why, is because let's say, Strat, you were one of my W-2 employees, and in quarter 2 of 21, I paid you a $10,000 wage. I can get up to 70% of that back. $7,000 is the max. Back. Now, I already paid taxes for that wage back in 21. That's why the tax amount burden is going to be very small. However, we always say this is why you're going to be telling your CPA, your tax professional, that, hey, you know what? I did receive $800,000 from the ERC program. You have to make sure you put that on certain line items within your taxes.
Okay, that's a really good one to know. So let's go over we have like 4 different examples of how much businesses are getting. So we have business 1, retail shop in the mall with 9 employees, and they could get technically like 68,000. That sounds about right.
So the retail shop, I think that one had, as when I gave you that example, 9 employees, was it?
Yeah.
Yeah, $68,000, little retail shop in the mall, does cell phone accessories. Another one I sent to you is a local restaurant here in Utah. They actually have 5 locations. So remember I was saying about EIN? So make sure people know, or I should say you guys should know, per EIN. So let's say you have 20 employees per EIN, or even 100 employees per EIN, and you have 8 locations. Well, it's per EIN. It's not the combined amount.
Yeah.
So as long as the EIN is separate, if it's 5 locations with 1 EIN, it is going to be that 1 EIN of all the employees on every location. So, and they got like 1.1, 1.2.
1.2.
Local catering company. And that's what I was saying with what they are is they're more of a meal prep company. I put catering, but they're a meal prep. And they're the ones I was saying that they had 2 or 3 employees and they got like 65, 70 grand. And dude, that was like awesome to them. You know, you hear some of these, like the local restaurant, that they still loved it, 1.2 million, but it wasn't a bigger impact than it was with those 3 employees, and so there is a lot of gratification with this. And then we had a trucking company that trucking actually did really well in 21, but again, the supply chain is a big piece. They had some shutdowns, they had to go do some stuff, and they got something like a little over $3 million. So it's pretty cool examples.
So what's the timeline for me to get my money?
So
like step by step.
Yeah. If someone here says, okay, dude, I'm ready to do this. Let's just get this going. They're going to go to erchere.com. At that point, they're going to spend about 5 or 10 minutes going through those survey questions per EIN. At that point, then they'll upload documents. They'll get an email that says which documents we need based on the answers or questions or answers to those questions. Then we're going to go analyze it. We're going to come back in a week or 2, put the DocuSign. Then we're going to file it within 72 hours. And then we have the 6 to 8 month waiting game. We send you monthly periodic responses of like, hey, this is where it's at. A lot of times for the first 3 or 4 months, we won't hear anything from the IRS. You as a business owner, you'll receive a lot of notices, and we tell you, because IRS is all about sending notices, make sure you upload it to your, what we call your account specialist. And then they respond to you on what exactly that means. And then in 6 8 months, check comes, and then it's dispersed to you, and we go from there. We actually never handle the money either, so we don't open up the mail and like send you the money. It actually goes to a third party, an escrow company. They send us our fee, and then you your fee or your amount.
Bro, that is amazing. All right, so now let's I don't want to say flex, but like let's talk about everything you guys have done for these businesses across the country. Like, how much have you gotten people in these last couple of years?
So we really cranked it based on the supply chain in October. We're doing about 100 million a week right now, so 400 a month. In the last little bit, we've done close to about 1.4 billion in credit, and we're up to about, I want to say 8,500 businesses right now. I might be wrong on that because it changes. Like I haven't seriously kept track of it for every couple of weeks because our system's so automated, that's like, oh, dude, that's awesome. I mean, sometimes I'll hear from one of the guys in our office, like, dude, we did 100 million this week, or we did this much today. I like when I found out about the Baptist church, it was because, or not church, but church school. I talked to the CFO. And then they let us know a couple of days later, but they let the account specialist know, like, hey, we're going to go ahead and get this started. Thanks for working with us. And then we have 25 other, schools on the church side that we want to send to you guys, but yeah, so that's what's kind of gratifying. This wasn't our goal in the beginning, but our goal right now is to finish at $10 billion in credit by the time we're done.
Bro, that is so cool. For me, the biggest thing is like, especially for like a smaller business, like that 30K check is going to be an absolute game changer. Like that adds a lot to your bottom line.
Yeah. I mean, I don't care who you are. 30 grand is 30 grand.
30 grand is 30 grand.
Right. I mean, 5 grand. I mean, like I still get giddy when I see something like that, even on real estate. I'm like, dude, made 30 grand on this wholesale today or whatever it is,
Exactly.
It's great money, and knowing that it's money that's deserved to you as a business owner, that, President Biden amended it for your benefit. It's up to you to take advantage of it. So,
and it's your money. You paid the taxes already. Might as well just take tax credit.
Exactly. It's basically a rebate. So why not get the rebate based on the wages you paid, for sure? Yeah.
And then, you guys will ensure you guys get the most credit. You guys have more than 43 years of forensic accounting experience. You guys have one of the top law firms in the country on your team. And a lot of other companies charge money up front or 25 to 30% of the back end credit, to where you guys charge absolutely nothing up front and then 15%. So another killer there. And then at that point, you're just incentivized to help them get as much money as possible. Like, it's pay for performance.
Yeah. I mean, and we've had companies, and I mean, people are welcome to do this. I obviously, I don't know if I would encourage it, but we have had people, probably 1 out of, I don't know, 50 people will say, hey, I had another company that was going to look into this, and then I saw my friend was telling about you guys, what can you guys do better than these guys? And I'm like, you know what? I just go through our process. It doesn't cost you anything. You can go all the way up until the DocuSign, and you don't need to sign it. I'd say 98% of people do, but you can go see how long they're going to take, because I'm confident in our process to know that it's going to be pretty quick for them, and we're going to give them a max amount of credit possible. I just know, like, the way we do things is we want to get the max amount. We want to earn the business. How we know about how other companies are. I was literally at dinner last night, and this guy was telling me the reason why I chose you guys is this other company, which I'm not going to say their names, but they're a very big company as well in New York. He goes, they charge $2,500 non-refundable fee up front, and then they're charging 15% on the back. Or if you don't charge if there's no charge of fee, they charge 30% on the back.
Jeez.
Yeah. And so they kind of incentivize, because what they're trying to do is bankroll themselves, but we're well past that, where we did that at the very beginning because we saw the opportunity. But at the same token, it's like, that was the one reason why he chose us. And then he found out some other things with our process that he really liked. And so, but the main thing he said, what even got me to consider you guys, even talking to you guys, is that one piece. I just feel like so many people are still skeptical sometimes, even when they do it, because they're like, dude, this is getting me 1.2 million or 30 grand. Okay, well, if you're not charging anything, if I don't have to pay anything up front, let's do it, you know?
Yeah.
And then they kind of look hard into it. Maybe they talk to their tax professional later or whatever, and they found out it's very real.
Dude, that's absolutely insane. Thank you so much for coming on. Is there anything else that you'd like to leave the people with?
No, I think we covered quite a bit. Again, to get qualified is go to erchere.com. You'll go through the questions, you know, and then at that point, you know, doesn't take you long, and then you're up and going in the system.
I love it. So we'll make this the full screen real quick for you guys so you guys can see it. Hit play so you guys get a nice big slide. Right there. ERChere.com. And Josh's company obviously is the best in the country, and they're going to do everything they can to help you guys get the most money possible. And one thing to where in mostly everything, I love working with people for its pay for performance, to whereas the only way they make the most amount of money as possible is if they help us make the most amount of money possible. So that way they're incentivized. Thank you so much for coming on, my man. That's all I got. Thank you guys so much for tuning in.
Thanks, Strat. Thanks, everybody. Take care.